Hey guys, it's your boy, Bryan Karp, AKA, wait for it, Mailbox Money with the man, the myth, the legend, Anthony Loffredo, the professor, and it is our absolutely favorite show to give you guys, Behind the Bricks. Dun, dun, dun. Behind the Bricks is where Anthony and myself, we don't have any guests. Who are the guests? Us. And what we do is we unpack. We go behind the curtain like Oz, and we show you exactly what we did for our acquisitions, what we have right now that we're fundraising, and all the craziness and all the fun and all of the hair that we've lost to get these deals to the table. Good morning, good afternoon, good evening, Anthony.
Good to be here.
Awesome. How was that lead-in?
It was great.
Good. Awesome. I practiced it on the way here. So last episode of Behind the Bricks, we literally went from all the way in the beginning, how Anthony and myself started the syndication, to us basically right before the closing. We spoke about the equity stack. We spoke about the syndication model. So if you guys want any of that, if you want to hear about the preferred rate, if you want to hear about the hurdle rate, if you want to hear how we found the acquisition, how Anthony underwrote it, click back and check the other episode, because this is part 2 of Behind the Bricks. So, Ant, we left them all on like a cliffhanger. Let's talk about, we are literally closing day. We close. How does that work? How do the utilities get set up? How do we find the property management company? Like, were me and you there, like changing over the electric service, like rekeying the locks? Kind of break everyone into what that looked like.
Yeah, so one of the important things is prior to closing, is even prior to having your down payment go hard, is what you have to do is you have to get your property manager on board and ready to go. You got to be very comfortable with them, and you got to have a plan in place so that the day you close, things are already in motion.
Okay.
Right?
Talk to me about how we found our property manager and I guess what we looked for in a property manager, because I think that's the biggest thing. We really didn't understand this. I think we knew it, but we didn't really know it, where the property management company is as important as the deal.
Yeah, without a doubt. They're the boots on the ground. They are the ones that you're going to rely on a daily basis to manage your property. So especially when you're so far away. So, finding them and getting them on board with our business model, and, it's essential in order to close on the deal and get it to, the position that you want it to be in. So executing the model, having them right by your side is super important. So, again, you want to get them on the same page. You want to do all this stuff the day before you close, So you want to have your plan in place. So prior to closing, you're putting letters on the doors, you're getting management, you're letting them know that the property is going to be underneath new management, what the changes are going to be. They're then handling all of the transfer of utilities. They're doing all of it. It's really, having them is such a huge piece.
Yeah. To be honest with you, I was overwhelmed and scared. And I was like, Anthony, who's going to, I was like, who's going to put the electric in our name? And he's like, calm down. And Anthony's right. Like, literally the day before closing, our property management group went out there on every single door. They let them know that they are the new manager. They will be collecting rents. Their security deposit has been transferred.
Yep.
They met with the old property management group, which is kind of like someone running it out of their car. They met with them and got the keys for the facility. They changed over all of the house meters. The house meters are basically the electric that stays in either our name or the property management name. This is also super important. They reached out to the utility company and said, if for some reason someone becomes past due on any of their utilities, please revert it back to the property management group. And the reason they do that is because we don't want any interruptions in service.
Right. And now the utilities are all underneath the property management company. So if there are any issues like a water main break, anything like that, they're on file to get the phone calls, right? So they're also in charge of paying the bills every single month. So they kind of control all of the bills, outside of the mortgage and things like that, but like all of the actual property bills, landscaping, all of those services that are needed to keep the keep the buildings up and running correctly, is all ran and managed by the property manager. So it's really hands off once you have the right people in place.
I also thought was really cool is as soon as they took over, the next month they invited every tenant into the office, to tell them all of their problems and their cares and their woes, which cost Anthony and myself a lot of money, but Anthony will dive into that. But also what I thought was really important is they took everyone's lease, they ripped it up, and they made them sign a new lease, same end date and same start date, but in their name. So this is really important, guys, for you to understand that the property management team actually holds the lease. It's another layer of protection for you as the apartment building owner or the syndicator.
Yep. And what you want to do on every property in every location is you want to interview a few different property manager companies and just let them do the talking. Let them explain what their process is. And that way you already know how you want things to go. You already know what your process is. Let them explain theirs to make sure that they're hitting on all of the things that you already, know that need to be done.
What did you say to our group and why did you choose them? What did you like about them?
Oh, they were terrific. You kind of go off of you go off of your gut. You go off of their energy. You go off of their vision. And of course, what they're already doing. How many units do they have under management already? Do they have their own units? Are they all in on this, right? So these guys were just professional, real gentlemen, and you knew they knew their shit the second that you had a 10-minute conversation with them.
I couldn't agree with you anymore. And for me, we interviewed a few different companies and then we literally fell in love with these guys and they had the same vision we did, right? So they wanted to accumulate units. They wanted to accumulate doors. That was important. Number two, that was really important for me. I don't know if you cared, Anthony, but if I'm hiring a property management group, they have to own doors. They have to own units, and these guys own a 20 unit. They have a bunch of single families, a bunch of multifamilies. I need someone who is an inside player. I need someone who's in the thick of it.
Yeah, because if they have their own units and they're self-managing their own units, they have to have the systems in place in order to be efficient to do it in the right the right way. So that's another big thing, that if they have all their systems in place as far as their back office type of things with dealing with maintenance issues and having the right crews and having all the right people ready to go as soon as the tenant says something's wrong. It's very important, right? You want the tenants are your customers. You want to make sure that they are getting what they're paying for. So it's really a key part of the process.
Well, we also found with the group that we chose, and of course we can introduce you to them if you're investing in our areas, or if you wanted to pick their brains about property management, was they were local. Right. It wasn't like it wasn't a satellite office. This group was born, raised. They know the mayor, they know the judge, they know the police officers. We wanted, especially if you're investing in tertiary markets, you want someone who is the player or is engulfed in that market.
Yeah. You want them to know the ins and outs of the markets. You want them to know the kind of people that are going to be renting. You want to know the kind of people that they want to be renting, right? So a good property management company is going to say, hey, we got 10 applications for the apartment this week. We turned down 9 of them because they want to get the best people in your building, because it also helps them too, right? Because they're the ones that are going to be dealing with the phone calls and all the issues and collecting the rent and all of that. So you want them to just say, hey, I don't want to get it. I'll just push anybody in to the vacant units because then we collect our VIG. No, you want them to say, hey, listen, we didn't get it rented, but we had a bunch of applicants, but they weren't going to be good. It was going to be a problem, whether they were going to harass them and want every little thing fixed and this and that and complain, or they were going to not pay half the time and, it was just going to give them headaches. So, you want them to also kind of play the long game because they plan on managing the property for years and years and years. So you want them to be able to know that, okay, we're going to be on the same page as far as the type of tenants that we want in the property.
Yeah. No, property management, I'm going to tell you, when I interview other syndicators and investors, when I hear bad stories, it's literally property management. It's always the case.
I mean, that's one of the reasons we bought the property, right? Mm-hmm. It was mismanaged, deferred maintenance, tenants weren't happy.
Yeah.
Shit was falling apart inside the units. That's where the value add was there. And almost all the time, like you said, it's mismanaged. it's kind of just left on its own.
Yeah.
You know,
we got a lot of comments on our last Behind the Bricks to like unpack more of value add structure. So I thought it'd be cool to at least touch upon, we closed right away. And there was, when our property management group met with the tenants, I think there was like 40 to 50 work orders that were immediately needed to be handled. It was kind of like that game when we were kids called Whack-A-Mole, where you knock one of those things down and another one pops up. But where did you come up with the budget of, okay, we're going to invest X and Y into each unit? Like, where did that come from? And how would someone try to do that when they're coming up with find a value add?
Yeah, the good part about this, particular situation is we had a list of all of the tickets that were submitted for deferred maintenance. So we were able to go through that with the property management prior to closing on the building and say, here's the entire list of all of the complaints, all of the issues that need to be addressed. Let's put together a rough budget so that we could knock these things out right away, kind of change the whole momentum of the building, get everybody excited that it's under new management. All of their maintenance issues are going to be fixed right away. So that was a big issue. So getting the mentality of the tenant, right, turned around and get excited about living in a building that is now going to be managed correctly, was the first step, right? And then to your point about the value add, the other first thing we did was we did a complete chargeback on the utilities, right? So to the value add point, we want to do things like we want to get the tenants excited. We want to get them to know that their stuff is going to be. We want them to be happy to live in the apartment, right? So, but when it comes to value add, it becomes you go to the numbers thing, right? You want to figure out a way to increase the income and decrease the expenses. Sometimes the easiest thing right out of the gate is to decrease the expenses. One of the big expenses that was on their financials was utilities. So they were charging chargebacks of only $15, which made, which just didn't align with what each individual apartment was charging, right? So we did an automatic chargeback of $75 to every single tenant first day. Mm-hmm. That when they came in and signed the new leases, making Southland the property managers, there was a $75 charge that was going to be added to their monthly their monthly bill. So knocking down those expenses by 40-50% right out of the gate is a massive value add.
Yeah. See, so you guys understand what Anthony was saying is when we look at a project and for our first one, we look as value add guys. What can we do to bring down the expenses, right? So for us, what Anthony just said was utilities. And what can we do to raise the rents? So right away, something that was cheap and didn't cost us anything was to tell Southland, our property management group, give everyone a 60-day notice. And going forward in everyone's ledger, now they're paying $75 for a chargeback instead of $15. Some people are paying $0 or nothing.
Yeah. Right.
So right away, we were bringing more income in there. Then from there, Anthony and myself said, okay, there's a delta in the rents. Yep. Whenever leases come up, we're going to raise people to the new rents. If they don't want to stay in that unit, we can move them into a renovated unit. And then what we did is all the vacant units, we started investing in them, fixing them up, and then putting them on the market with the new and improved rents.
Right. Correct. So that was another thing that we had to kind of go through and budget. So we walk through all of the apartments with the property managers. Again, having the property managers on site when you guys are doing the walkthroughs is essential because they're the ones that are the boots on the ground. They're the ones that know the contractors. They're the ones that know the local prices. You can't go in there down in West Tennessee and when me and Bryan walk into an apartment, it's going to cost $40,000 in New York to fix it, but down south, it's going to cost $10,000. So there's a big difference. So having the people with the expertise on what things cost in that area, you have to have them there when you go through the walkthrough. Otherwise, you're just going to be shooting off the hip when it comes to trying to budget.
Yeah. And I think it's nice to have people who, when we met other property management companies, they were just yaying us to death.
Yeah.
And you could tell that they were, what's the word I'm looking for? They were just like an assistant of someone who was at the company. When we met with this group, they were like, oh, no, this is going to cost you this, this, and this.
Yeah. And we know him. We went to high school with him. We get a good deal with this. Again, to Bryan's point earlier, born and raised in the area, that's what you need. The bigger property managers that have, satellites everywhere. I mean, one guy was hanging out of his truck smoking a cigarette, waiting for us, to go through it. And you could tell right away, right? If you have a good sense of of understanding who somebody is right away when you meet them. You just kind of go off of that as well.
All right, so now we close. We're meeting with our property management team. Talk, Anthony, about the cadence that we have with them with our weekly meetings, what we kind of go through in those meetings, because I think this is important. All right, you find someone great, you hire them, but what's next?
Yeah, weekly Zooms every Wednesday morning for at least an hour. And, you know, what both Bryan and I do is we'll actually meet prior to the meeting with the property managers to kind of go over all of the whatever it is, creative ideas that we had, you know, things like that to kind of mark down. But we have a running list of all the notes that are taken in each meeting. So we kind of start off with, okay, how are we doing on the renovations on X, Y, and Z unit? How many units are available for rent? Do we have any applications for this? Any new leases that were signed? You know, we kind of have a template of all questions that we address every week, and the property managers know this, right? So they come prepared. So it's not this long, you know, it's not this drawn out meeting. It's an efficient meeting. They know what we're going to ask. They know the answers that we want, and then we'll talk about some other kind of creative things and any kind of pop up issues that went on throughout the week.
Yeah,
but it's weekly and it doesn't change.
So, and it's a way for us to hold them accountable.
Yep.
And it's a way, because at the end of the day, Anthony and myself are accountable to our limited partners, right? These are the men and women that invested their hard-earned money next to our money, and they want us to multiply it.
Yeah.
So we have to report to them, and our property management company has to report to us.
And listen, it's just natural. If you take your foot off the gas when you're dealing with somebody that you're paying, they're going to slowly, not to say that these guys would, right? These guys are great, but they'll slowly take their foot off the gas a little bit and kind of get away with whatever they can, right? So if we said, oh, we're going to cancel this meeting, and oh, we're going away, oh, we'll do it in 3 weeks. Now they know, okay, they got a month in order to do things, right? So like you have to keep on top of everybody, especially like Bryan said, when you're not there. So holding them accountable, knowing that we're going to be on the call next week, knowing that we're going to have these questions, knowing that we're going to want support for the answers that they give, instead of then just say, yeah, we rented them all. No, we want to see the leases. We want to see the dollar amount. We want to see pictures of the renovations that are in progress. You know, these are all things that are just holding the property manager accountable. It's essential.
It is essential. The biggest thing that I think that we weren't prepared for, which I kind of want to say to everyone, is when we purchased this property, I think it was 98% occupied.
Yeah. Right.
And then we end up kind of like pulling back the onion. And it turns out that I think right now we have about a dozen vacant units.
Correct.
It wasn't, what it was it was 96 or 98% occupied, but then the 8 people who weren't accounted for were there, but weren't really paying, or weren't paying on time, or had dogs bigger than me and Anthony, or were doing meth, or drug. I don't think we have any drug addicts, but you get what I was saying.
Yeah, right. You had a lot of people that, again, you don't want those people in there. You'd rather them be out. They don't do anything except cause more problems. So you get those kinds of people out right away. And then you have a handful of units that you get in there and you start renovating, right? And then with the renovation process, you say, okay, let's do for these apartments, for this area, for the size of the apartments, it costs around $10,000 to do a full renovation on them. That's new kitchen, new cabinets, all that stuff, right? So, but there are some units that are in better shape than others. So we kind of tested the market a little bit. Let's do a $3,500 reno on this, and then let's put it out there. Let's see if we can get our number. And we did.
Yep.
Right? So every unit that you do something like that for, and then the ones that were worse in worse condition, you do the full renovation on them, and then those fly off the shelf, right? So, but everyone that you could do those smaller renovations and still get to your target rent, that just comes right off that just goes right to the bottom line.
Yeah, and we've been very pleasantly surprised that we've been able to keep at the budget or slightly below per unit, which now gives us more of a bankroll to keep rolling through the units, and also will help us because and this is what we're doing going forward, is we'll change our model to make sure that we, what's the word I'm looking for, that we analyze, underwrite for 10 or 12 or 15 vacant units during our value add and our restabilization of the building.
Right. Yeah. Always be conservative in your underwriting. That's why we had such a high renovation budget before even closing on the building, knowing that we were going to have a little bit of a cushion because some of the units were not in horrible shape, right? And then you still, and again, you had a couple tenants that were paying that top dollar already, so you don't need to renovate those. So, but being conservative with your budget, understanding that there's going to be a lot of vacancy in the first 12 to 18 months on this type of business model, right? When you're doing the value add, you're going to have that. So you got to build it into your numbers to make it make sense, because when you're presenting it to your limited partners, and then they're asking you, oh, what's going on here? Why do the financials look like this after 3 months? If you didn't already tell them that it was going to look like that, you're going to look like you don't know what you're doing. So it's important to be very, very tight and very conservative with your numbers.
We try to explain to all of our limited partners that we're going to bleed for the first 18 to 24 months, because this is our strategy, right? We're not buying a stabilized asset, right? And if you buy a stabilized asset, you're not going to get the high double-digit return.
You don't have that you don't have that forced appreciation.
Yeah, we're forced appreciation. So we're gonna get some punches in the face and lose some money and spend money. But when it's all said and done and we restructure the property and it's stabilized, we're gonna make even more and a higher return on the investment.
Without a doubt. Yep.
So it's a boots on the ground. It's an aggressive, it's an energetic, it's like you're going nuts and fighting for it model that we have. But that's why we're able to give the returns that we're receiving, because we're knee deep into what's going on.
You have to put the work in. This is not passive by any stretch for me and Bryan. So, we're in it every single day. We're working on it every day, and there's just a lot of moving parts. But again, it's part of the model. Everything is built into the numbers. So, execution is the key.
Yeah. A story why we knew our property management company was on our side was this is right before Thanksgiving, right? So I think it was we might have missed a Wednesday meeting because it was Thanksgiving Eve. So we ended up meeting the following Wednesday. We get on the phone with our property management company, and the first 2 minutes we're all going back and forth saying how the holiday was. And our property management, Chris, says to us, I got some bad news. So immediately Anthony and myself, our stomachs drop, right? And he's like, we had a major water main break on Sunday of Thanksgiving weekend. So first off, we were so elated that me and Anthony were with our families and we didn't get a phone call. That's a good property management company. He's like, but Bryan, this wasn't like a little bit of a water leak. We literally had a geyser in the middle of your parking lot coming out of water. And it was so big, we had to bring heavy equipment to dig it out. On top of that, we had to have the city come out on a Sunday and spray and flag where all the utilities were. He said once we got to the bottom of the ditch where the pipe was, the fitting was so big we couldn't even buy it at a plumbing supply store. We had to purchase it directly from the city's water authority. He's like, so we're not going to take a percentage of commission or a percent of a property management on this. And when he said that, he literally, the next words out of his mouth was, if you don't succeed, I don't succeed. Yep. And I'm your partner in this project.
Yeah, that was great. That you knew that they were, listen, we hired them. We already knew it, right? But that was just more confirmation that we have the right people in place in order to do this for us. Yeah.
Let's segue now. What is the cadence to our limited partners? Like, do they hear from us once a year? Do we send them a letter? Do we, what does that cadence look like? And what should someone expect when they're working with us?
Right. So from the updates on a regular basis side, that you have Bryan shooting videos and updating the limited partners. You're doing it every couple of weeks, right?
Yeah, every 30 days they get
once a month. They're getting a video of updates, and what we do on the financial side is we have financial quarterly reports. So every quarter, after the accountants put together the final numbers, we'll have a whole review of the financials themselves. We'll have a review of all the renovation costs, what the units cost, the amount of vacants, the amount of fills, the new average rent, all of the fun stuff. As far as the financials and the numbers go. So on a quarterly basis, that we have a Zoom call on, and all the limited partners get updated on every single dollar of the entire project.
The biggest thing for us is massive amount of communication. That's what we pride ourselves in. Mm-hmm. I know it from my residential real estate business, right? Anthony knows it from his business, is we like to over communicate. So the cadence that our limited partners will see is during the value add when we're not sending out distribution. What is it? Distributions. Thanks. And when we're not sending out, they'll hear from us every 30 days. Once we get the property stabilized, they'll start to hear from us maybe every 60 days once we start putting out some cash flow from the property. And then, like Anthony said, we're probably scheduled in April to have a meeting. We'll do a Zoom. We'll go through the first quarter. We'll go through the financials. All of our limited partners get their K1s that come out.
Yep. Yeah, keeping in communication. And obviously with our limited partners, we're a phone call away. So if they have any issues, concerns, questions, just want to check in, they reach out and we give them the update.
I'm going to stop the interview and ask you guys, if you like this content, you have to subscribe. You have to share this. Tell a friend, right? We need you to spread the word. Anthony and myself are going deep on our businesses, our ventures, and we need you to share. The second thing I'm going to ask you is if you thought about investing in real estate, but never thought you wanted to walk the road alone, this is an opportunity for you. If you are a sophisticated investor and you want passive income, I am telling you to invest in a syndication. Reach out to Anthony and myself. Every quarter, we have meetings with new limited partners that find out about our deals, find out what we're fundraising, see the rate of returns that we are offering, and talk about our strategy. Reach out to us. We're excited to partner with you. And remember, we're looking to build financial freedom, not just for this generation, for generations to continue. All right, we're back in the show. And now what I want to dive into is we ended up doing a cost segregation study on our newest acquisition. And why don't you talk a little bit about what a cost seg is, and then we'll talk about how much we ended up pulling out in losses in the first year.
Yep. So typical depreciation for a building works on a 29 and a half year schedule. So the value of the building divided by 29 and a half years is the amount of depreciation that you could take on the building every year. So what a cost segregation study does is it segregates all of the parts of the building and gives them a lower useful life. So that way you can accelerate the depreciation. So they'll say the appliances have a 3-year or 5-year life. They're valued at this. So you could take that valuation of the appliances, the windows, the floors, and you divide it by that lower number, that 5-year or 10-year mark. And that's essentially like the quickest kind of summary I could give for it.
Yeah.
Really what it does is it just accelerates the depreciation, and it values different pieces of, not everything is valued. Not everything in the building has a 29 and a half year life, right?
Yeah. And the key to it is that we're able to rip it all out.
Yep.
Because we're not planning to own this asset for 29 and a half years. So we rip it all out and we use it in years 1, 2, and 3.
Right.
And we're able to pass it on to our limited partners. Yep. So if you're a limited partner in our projects, you're not loaning us money. You're actually owning a piece of the brick and the glass and the steel. So you get depreciation. You get losses. Even though you're not taking a loss physically, you're able to use a loss on your tax return.
Yep. Pay for losses.
Are huge. Yep. Anthony and myself just signed the tax return for our asset, our 51 unit, and there was $503,000 in losses in the first 120 days.
Yep, that's based on the cost seg.
It's based on the cost seg, right? And that's something that's being passed on to every single one of our limited partners. So I'm telling you that if you've thought about investing in real estate, doing it alone is a very lonely and scary process. Find a group, find a syndicator, park your money with them, and really turn it into some passive income.
Yeah, absolutely.
We're heading towards the end of this show, but what we want to do is tease you guys a little bit about what we're going to have in our next Behind the Bricks podcast. And Anthony, why don't you tell them a little bit about the Troy Apartments? It's our newest, we're excited, our newest 36-unit acquisition. We're actually currently in contract and we're fundraising for it right now. So we got another 5 minutes. Why don't you give a quick deep dive into that?
Yep. This 36 unit was brought to us by who other than our property managers, right? So they got the boots on the ground. They have all the contacts in Dyersburg. So they had come to us after one of our Wednesday meetings for St. John's, for St. John's.
The Grove.
The Grove, that's right. They had mentioned, hey guys, listen, we have this 36 unit that we're looking at. We can get it for a great price. Would you like to partner with us? So now the biggest thing that Bryan and I took away from that right out of the gate was they weren't saying, hey, we could get this, we can get this building for 1.7. You guys want to buy it for 1.8 or 1.9? They said, do you want to partner with us? So we knew it was a very good asset right out of the gate, right? Because these guys, when they buy at good numbers. So because they have all the relationships and they have all the trust that's built in their, in their community. So we were super excited about it, and we're in full contract. We're co-GPing with the property management company. We went down there, right? We put together a whole plan, our renovation, all of that. So now we're doing the fundraising, and we're super excited about it. It's in one of the best areas of Dyersburg, and there's just a ton of value add potential.
I think the big takeaways there is our property management team has a brokerage arm. They could have marked it up to me and Anthony and made a 6-figure commission, but they said, keep the commission, give us the equity.
Yep.
And that's what I like. So it was a very, it's all about relationships, right? We spent the first year knocking our heads against the wall trying to build relationships. Now we have relationships, and great deals and opportunities are coming our way. Another reason we were able to jump at this is because we're already knee deep in that community. So what does that mean? We know what units should rent for. We know what it costs to renovate. We know there's population of 20,000. We know all the drivers. We know the locations. So it was very easy for us to make a quick decision.
Right. And we already have proven the model, right? We've already renovated the units at the Grove. We've already rented them out at the new numbers. So the plan is in place, and it's being executed already on the Grove. So it's the same area, it's the same people, it's the same contractor, same everything. So it's just a continuation of the Grove at this point.
Yeah, we may even rename it the Grove 2 or something like that, right?
Yeah, you can.
Something creative, but it's rinse and repeat. And we actually like this asset as much as the Grove, but it's probably a little bit of a nicer community because it's a little bit of a newer vintage. It's a 1985 vintage.
Right.
It doesn't have any 3 bedrooms, and what we can tell you, what we've learned is 2s and 3s are very popular. It doesn't have any 3 bedrooms, but it's all 2 bedrooms. And there's 9 brick buildings, and there's second floor and first floor units. Second floor units have vaulted ceilings and fireplaces. First floor units have French doors.
Yeah, they're beautiful.
They're beautiful.
Yeah,
and they're
big.
And they're huge. They're already getting the rents that we are underwriting for that development.
Yep.
And then here's the kicker. It's all electric heat, which we love, right? So they're not paying for electric. They have individual water mains.
Yep.
They're not paying for water. So what does that mean? Right away, Anthony and myself are going to go in and start doing chargebacks, and then we're going to start renovating.
Yeah, super excited about this one. And we're underway. We're fundraising now, and we're working on our Freddie and Fannie loans. So, we should be closing on this in 60 days.
If you guys enjoyed this content, give us a thumbs up, give us a comment. If you think we stink and suck, don't tell me, tell Anthony. He's got a better skin than me. I'm very sensitive. Share this show. If you're interested in learning more about being a partner in one of our upcoming projects, please reach out to us, and I will see you next time on Behind the Bricks.